Hey traders, Crash Alton here on the 9th of February. We're going to be doing a market debrief on the NQ futures. We'll be specifically looking at my specific way of trading, which I call the impact trading system. I have four specific components to it. The first is called the NAVDAR, which is short for NAV radar. This is basically an advanced time and price cycle rotation methodology, giving us predictive both multi-day and intraday rotations. We'll be looking at the iStructure chart, which is this 1 minute chart of the MNQ. We're looking at it on Pacific Standard Time, and this chart provides a system of very specific structured trade setups that have repeated patterns daily. We also have an iSnipe chart, which I'm not going over today just due to the length of time it would take to cover that as well. I want to keep this video under 10 minutes. But we will also be looking at our fourth component, which is Bookmap order flow. I will show you an example of that and how we use Bookmap, highlighting particularly the market pulse indicators that are currently in beta mode with the Bookmap organization right now. Let's get a little housekeeping out of the way. I'm not a professional. I'm not offering trade advice or trade recommendations. Do your own research, please. I don't accept any liability for any loss or damage that you may occur. All right, now that's out of the way. Let's look real quickly at the NAVDAR system. All right, again, this is a methodology that gives a price targets within a certain time window. On this particular day, we were looking for a AM low to be followed by an AM high. Then we were looking for another mid AM low to be followed by one more rotation up to the PM high to then have another shallow PM low somewhere below the PM high. This system does give us windows where we do have these price targets. Our price targets are identified before RTH. If we look at this specific setup here tonight, I'm going to be focusing specifically on something called the ACE trade. The ACE trade is something that I have referred to in one or two videos before. Our system, we are looking for trades, structured trades that allow us to get 30, 50, 75, and 100 point winners. That's what we want. Yes, we do have a sniping system off our iSnipe chart, but today we are going to talk about structured trades, specifically the ACE trade. It's a line right here, the ACE trade. This is designed to give 50, 75 to 100 plus points, and I'll show you four examples, three in addition today, where we have identified targets of 50 points or greater. If we look at this AM low here specifically, at this ACE buy line, this has points of confluence. We always use points of confluence with our structured trades to give us a higher probability and better risk management. At this particular location, we had sell sweeps into sell stops and on top of a liquidity zone on the ES. This also happened to be the location of the ES gap fill on the ES futures chart. And then if we looked at the Bookmap order flow chart, we would see something called Market Pulse VPI. Market Pulse VPI stands for Volume Pressure Indicator or Imbalance Indicator. That is identified by this red spike. It is co-joined at this particular low with something called the CVD line on the subgraph of this Bookmap chart. When we have the VPI red spike down into a co-joined location of the cumulative volume delta, that is signaling for us that there will probably be a reaction and a trend change, a change in direction. And you can see that's exactly what happened today. We had sell sweeps into sell stops, over 1,300 sell stops. We were followed by a large quantity of volume, bigger than anything we've seen in the pre-market hours, for a mean reversion back to VWAP. In which case we came back and had a very shallow retest of it, and we continued off to the races to the PM highs of the day. Very great technique to use this as part of our trading system. As we make our climb up to the AM high, we're looking for points of confluence as well. In this particular case, we have the R3 pivot. We also had a Fibonacci target that was up here that was pre-identified the night before from yesterday. and we have this dashed line, which is our T-map line. So these points of confluence gave us an area either to leg out of our trade or to reverse trend direction and take a short if we wanted to do that. We're looking in this particular case at our pink, magenta, lime green cloud here. When we have the cloud, we call this cloud the guns cloud. When it crosses above our other cloud, which is this shaded green cloud, bordered by our Fox 2 line, the yellow line, and our red Viper line, we call it the guns cloud because it triggers a response. And in this case, we got a buy signal after we broke out above the ace line. So we could have taken the low and legged in down here at the gap fill on the ES that coordinated with the ace entry location on the NQ. If you didn't take that, you could have legged in on the blue buy arrow that you would have gotten off of the guns cloud. If that didn't work, you could have taken a first pullback right here after we break out of the cloud and we come back into the cloud. Or if you missed all of that, you could take the very first large pullback, shallow it may be compared to other days, and entered into a continuation trade long there as well. Now, on this particular system, we get a very shallow pullback to what we call the eagle trade. This is our blue line. We get this 3 times. Usually in very strong uptrends, we get to have it 3 times. After that, we will look to not go to the well too many more times. The PM high had multiple points of confluence, just like the AM high did. At this particular spot, we had our cycle day pricing system from the NAVDAR research, gave us a possible rally point of 18,079. We also had our top T-map treasure line, which is a reversal spot, usually a good reaction spot to take a short or to leg out of longs. So all of our trades, we get multiple points of confluence. Now let's look if we had legged in down here, how many points we would have gotten if we legged in on this line and we took it to the first target, which would have been R2. Definitely leg out some at R2. That's a 75-point move. You get a pullback. You could continue with the continuation of the trend for a first pullback long if you missed all of this. And in that case, what that would have given you was 129 points. If you actually held it the entire day, raising your stops like we actually try to teach in this trading room, you could have had 193 points from the ace line or 198 points on the day from the very low to the very high. All right, you can see how our system produces 50, 75, 100 plus trades. Now let me show you a couple other trades from this last month. Here's one on the 17th. This was a short off of our pink, magenta ace line. This produced 53 points. These are structured setups, all right? They have structure to them. They have meaning behind their locations. Here's a date of 18 January 2024 last month. We had 2 entries long off of this ace line. In this particular case, our first touch gave us 127 points. Our second touch for the continuation of a larger pullback into a long continuation trend was once we break below the line and we pop out back above it, we get into it a second time. We could have taken it to the very first kind of real pullback. This went straight vertical, kind of a V shape down here. This produced 137 points. If we would have held it, we could have gotten all the way up to 190 points. Let's look at just one more. This is on the 19th of January last month as well. This A trade actually looks very similar today. We kind of have a little bit of a wedge down. A snap at the beginning of the morning to hit our ace trade. And then we pop back up to the PM highs. You can see that this pattern repeats, and we have shown that with our NAVDAR system. This day produced 385 points. If you guys are trading most of the time, you will remember this day. Very abnormal day, very, very bullish. But if you will use our system, raising your stops, legging out on the way, we leg in so we can leg out. All right, our entries are very precise. We don't have anything more than about 10 to 15 points of stop. If we stop out, we'll get out, we cut our losses, and then we'll get back in if we need to. Our system teaches you to hold and to trust the system with very tight stop losses. Leg in, leg out, raise your stops, cut your losses, but let your winners run. All right, just to show you that I practice what I preach, I'm just going to give a quick picture of the trade where I legged in down here at the bottom. This is off actually my sniping chart, but this was another point of confluence for us off of this line down here. And then I leg in originally with 4 micros, leg out, I get a pullback, and then I continue on with the trend for the rest of the day. All right, everybody, I hope that was beneficial and helpful. I want to keep these to about 10 minutes, so I'm going to stop there. If you have any questions, please reach out to us on Discord. You can hit us up at Crash F16. We're also on YouTube at Impact Trading System, and we'll be finishing our website here shortly. Oh, just as a last minute something I wanted to show I've blown this trender up, but I wanted to use this today, make it a little bit bigger, because I want to show that it's an excellent system for finding trade entries as well. Very similar to the Market Pulse VPI. We get the red star warning telling us that we're going to have a low down here. We get the red star warning that we're probably going to peak out up here. And then up here, we had a peak as well for the PM high, and we got our warning with our extreme dot up there telling us to leg out or to look for transition for a short. Okay, again, keeping it short. You guys remember check 6 and stay safe out there.